Okay, welcome everybody to this AMA. This is more for the people who haven't joined this and are watching the replay. Got my glass of water here. It's filled with ants. I don't know where they came from, but whatever. It's good protein. Before I move on to the bulk of this lesson, and by the way, Perry, I'm just going to take your suggestion, and I'm going to go through several markets, mainly because there's not a lot going on in crypto, in my opinion, that we haven't actually discussed already. So let's look at global liquidity. Let's mix it up a little bit to form like an outlook for the rest of the for the rest of at least the next quarter, the next 3, 4 months, 6 months. This is the usual token. You probably don't care about this. So ask me in chat if you want to know what that is. You can get good yield from that. You can see Bitcoin not doing very well, unsurprisingly. You can see from the arrow what I'm expecting. But before I do that, got some changes that I want to make to this group. Nothing that will impact you in a negative way, I promise. And if you think it does, let me know, and I'll make sure that you guys feel like I'm taking care of you all. So what I want to do is I have this idea. I want to move away from charging for information, and I only want to get paid for I only feel comfortable getting paid for actionable content, actionable information. Specifically, what that means in this context is I think the course should be free. Because in my experience, most people, and I have sold a lot through my company, Wise, I've sold hundreds of these. Most people don't even bother to take the course. I mean, that's just a reality. So I feel bad like selling this. And by the way, they don't have access to the chat group. Company doesn't like that. So whenever I sell through the company, they just get the course and that's it, which I don't like. But whatever, it's their call, not mine. So I want to make the course free. I'm going to put it on YouTube, probably. Talk to Max. You guys all know Max, or some of you know Max. He thinks it's a good idea to put it on YouTube because I didn't know where it belonged. And I said, man, maybe it's do a website, give me your email, you can see the course. But no, he said, no, just make it free, put it on YouTube. I agree. It makes a lot of sense. I have taken a lot of amazing free courses on YouTube. It's just a way to get back. Haven't done that yet because I need to restructure it and what have you. I'm also going to rework a few of the lessons, but it takes months. Like it takes a week of planning to do a lesson. It takes another month to edit the lesson. It's a lot of work. Very expensive too. So it's coming slowly. Perry, I am going to take your list of suggestions. I'm going to give it to the editor also whenever I rework this course. Of course, now that the course is free, I'm not getting revenue from it anymore. So got to figure that out. But the course needs to be free. The chat group, I also want to make free. However, there's going to be an extra step where I'm not going to put up a Discord link on YouTube or anywhere else because that way you can't really filter out who's coming in. One of the concerns that my company that they raised is, hey, if you just have an open Discord group, there can be all manner of things. I actually had a people, for those of you who came from the Brett Signal chat, we actually had a couple of people who tried to scam the group, a couple of them, and we only had like 15 members in there. So of course, if I just have an open link and anybody can join the Discord, we're gonna lose a lot of quality. So I don't want that. So the courses are gonna be free. But then if you want to join the Discord, for now, I'm just going to add a description on the video saying, hey, text me, send me an email or whatever, and I'll personally put you inside of the Discord. That way we keep the Discord somewhat private. It's free, it's open. Actually, a lot of people who have joined the Discord, I met personally, and I decided, hey, I like you enough. I'm going to put you in this Discord. So that's already been happening of sorts, but I'm going to make it more official. And so the course will be on YouTube. Anybody can take it. I highly encourage you to point people in the direction and encourage them to take the course, review the videos, and hopefully if they like what they see, they can join. They can ask to join the Discord if they want. The Discord will include, of course, the AMAs. I'm not going to filter that out. So the classes will, everything that's a class, that's education, I want it to be free. So that's kind of the direction I'm moving in. Just anything that's education will be free. I'm not sure the forecasts are going to be available to all. I'm leaning on yes. The simple reason is I said education and information should be free. For now, the forecasts are just information. They do not inform any trading decisions. that I personally make. I will eventually develop trading strategies that use the forecasts. Those will be behind a paywall. So what I want to do is I want to create a bunch of, I've been working very hard for months, years actually, on this automated model. And I'm at the point, thanks to AI, where the model runs every day now across many crypto assets. And I'm going to include more. It's only 10 for now. Eventually it's going to be, maybe 50 assets. And eventually I'm going to move on to covering TradFi too. So it's going to be commodities, stocks, bonds, anything will be tracked by my model, analyzed every single day. And it's going to create, there are preset trading strategies that run on all of these assets. Of course, for now, I'm just going to focus on crypto. TradFi will come at a much later stage. I'm in the process of debugging all of that, but right now I already have a few vaults on Hyperliquid, the decentralized exchange. I don't know if you know Hyperliquid. It's great. They were involved in some controversy recently, but honestly, where I land on that is somebody tried to steal money from the exchange and the exchange blocked their account. So no problem there, in my opinion. That's what exchanges do. I mean, he was literally trying to extract money from the exchange. So that's stealing. That's not trading. So his account was reset to withdraw only, and the market was frozen. And apparently, it's part of the documentation. Of course, I mean, I worked for some time on trying to create an exchange. I understand how they work pretty well, and you need to have some sort of safety guards in case somebody tries to exploit you, and especially on the blockchain. But the cool thing about that is if you have strategies on Hyperliquid, you can deposit your money into any one of those, which is pretty cool because then you don't have to do anything. My algorithm will trade a select list of crypto assets that I would like to trade because most of my money is in there. In fact, on these vaults, you need to be at least 50% of the vault asset. So my own assets will be deployed on this vault, and anybody can join freely and participate in the automated trading strategies that are on these vaults. I'm going to launch 3 in total. I'm working on the first one, and then the other 2 are coming later because it's a lot of repetition. It's most of the code is reusable, but majority of it. So I'm going to launch one, make sure it works correctly. It's now on testnet. I can share with you later what the vault is in case you want to track it. But keep in mind, it is on testnet. It's a single strategy, and there are bugs. I'm squashing bugs weekly. It used to be daily, so now it's weekly. So that's great progress. The second thing I'm going to do is I don't know if Americans can actually participate in these vaults. So I'm also going to offer a service where you get trade alerts sent directly to your inbox daily. Most of the times there are no trades, but it's going to be trading strategies sent to your inbox directly. And it's going to be a subscription service where you can choose which strategy you want to participate in. It's going to be tiered. In other words, like it's going to be a long-term strategy. It's going to be super cheap and it's super profitable. And then if you want to move on to like short-term trading, it's going to you're going to have to pay more, but you're going to get every single strategy. This is where I'm leaning right now. Of course, none of this will launch anytime soon. It will take months because I want to make sure everything works. But this is what I'm going to sell. It's just going to be trading services and actionable content. Access to my model that does all the cycle analysis, that might come if there's demand for that. It's just information though, so I don't know what to do there. Still haven't figured this out. All I know so far is I want information and education to be free, and only actionable content should be behind a paywall. That's the direction that I'm moving in. Again, haven't sorted out all the details, but that's basically what I want to do. And of course, I want to get your feedback on what you think, how it impacts you personally. Of course, you're all going to get all the subscriptions, in case I haven't made that clear. Once they launch, this group gets everything. I'm going to create a new tier of member. And since you're the founding members, I'm going to add you as a founding member. You're going to get access to everything. Everything I launch, you're going to get it. This is my way of saying thanks to you all, because if it wasn't for this group, I wouldn't even be inspired to do any of this. But I would do want to get more people to take the course, and I do want more people to have access to this information. The only place where I feel comfortable saying, okay, you gotta give me something if you want to get that, is all of the trading strategies that I teach in the course are automated and they are part of their own little strategy. There's even things in that in those trading strategies that I haven't taught in the course, simply because honestly, some of these strategies kind of require a bot. They are based on cycles, but it's very hard to keep up. It's a full-time job to try to keep up with these. My favorite strategy, which is the one vault that I'm going to share with you all, it trades a 5-day cycle. And the 5-day cycle is extremely short term. There's one here, for example, right? And it ended here, and then there's another one here. And it's very active, and another one has just peaked here. So it's very hard to track. It's actually hard. I tried to do this manually, and maybe you can do it with 1 or 2 assets, but these vaults will trade 10 different assets. You can't keep up unless it's your full-time job. The thing is, that strategy beats buy and hold by a lot. And it doesn't even require bull markets in crypto. It just requires some volatility, not even that much. Risk is very, very limited. You're only in for a few days unless the trade is working. When the trade is working, you can stay in for a couple of weeks. If not, you're out immediately. So very little exposure. It's almost day trading, but not really. But it's automated and it works very well. So I'm launching that. And just to be clear, the inspiration for launching all of this is I want my own money on these strategies, but I thought, hey, why not share these? It can be a subscription service, or you can not give me any money, just deposit your money on the vault, and the bot will do all the trading for you. It's pick your poison. I don't mind either way. I'm not going to push people to buy any of these things. They're super cool though. They're good, and my own money is in them. But nobody has to do that. Anyways, recording on. So what are you? Okay, so Perry, yes, I'm gonna answer questions about this and move on to the bulk of the class. Of course, I don't want to mix up the topics. So what you're talking about is future project subscriptions is totally separate from Wise subscriptions that you are also currently write for, correct? Yes, these are totally separate things, simply because Wise doesn't have the infrastructure for this, and they don't really fit the classic newsletter type model, especially the scalping stuff. Hyperliquid vaults is not even something that they're going to bring to their customers. So yes, these are separate subscriptions from Wise that take advantage of the new model. Now, full disclosure, I am working on some new things at Wise that will use my models, but they don't take full advantage of them. It's just a newsletter environment. And when Wise launches newsletters, this is not a newsletter. You're just going to get trade alerts, no commentary, nothing. You're not going to get anything from me. Just a little alert says buy Bitcoin and the name of the strategy. I'm probably going to do videos explaining each strategy so you know what you're getting into, but there's no hand holding here. This is what makes them totally separate from the Wise model, which is more, geared toward people who need more of a hand holding. You need, help setting up wallets or whatever. I mean, I'm talking DeFi stuff here. We're going to be trading stuff that doesn't belong in a newsletter, and it's a lot more involved. There's not going to be customer care or any of that. So as a result, the product will be cheaper than what you can get at Wise. In some cases, if you go into full subscription, it's going to be more expensive than a Wise subscription. So for some people, actually, Wise may still make a lot more sense because they just want the one thing with the hand holding, go to Wise. If you want no hand holding and access to 20, 30 different assets, this is where you want to go. It's different. So yeah, these are separate subscriptions. Absolutely, Perry, because yeah, this is part of the education thing, and the way to monetize it, in my opinion, is to allow those who want to take advantage of the automated version of what they're being taught in the course and feel comfortable doing this, because if you take the course and you do the work, you don't need to buy any of this of these things. You just don't. You can do your own work. I don't mind even showing you how the 5-day cycle scalping strategy works. I'm just telling you, you're probably not going to be able to run it manually, because it is actually hard, because it's too active and it's too fast. And if you do it manually, you're gonna make mistakes. I'm saying this from experience. Again, the same main reason I'm launching these automated strategies is I want to follow them, and I have not been able to. Literally, I've been unable to follow the strategies due to how they've gotten complex enough that for a human, it's hard to pull off. So my role now as a manager of these assets is simply to write a strategy that makes a lot of sense, but then let the the mechanical work, I'm going to let a bot do that. I'm going to write code that will do that because it makes more sense. Computer's great at executing automated things. It cannot figure out the best trading strategy, but I can figure that out, and then I can feed that to a bot. All right, so once this crypto bull run cycle will be over, by the time these new projects go live or public, altcoins would be dead, even 90% gone by then, I would think, coming from Perry. Crypto's not going to die. It's not going away. A bear market is coming, in my opinion, if it hasn't started already, but it's not going to die. Not only that, keep in mind, there's going to be TradFi trading too. I'm trading gold very actively now. And since gold is tradable on the blockchain, I might launch a trading bot specifically for Paxos Gold, which seems to be the most liquid of the gold stablecoins. It's extremely liquid on the Deribit exchange, which is a Dubai-based exchange, the largest options exchange. You can trade gold there. So I can tell you that at the very least, after crypto, I'm going to do gold. Because I can do it on the blockchain with very similar tools. If I wanted to launch a trade bot on TradFi, I don't even know where I would begin. I'm guessing some of these brokers have APIs, but it's a whole separate project. Not interested in doing that for now. But yeah, by the time these projects go live, Perry, which is probably going to be Q3, Q4 of this year, there may not be a lot of interest. I don't care. It's fine. I don't care if nobody comes. I'm just going to build it. And because, like I said, my money is going to be on these strategies. And I know I can make money from them. So if nobody wants to join these vaults or buy these alerts, I don't care. That's fine. If all you want is education, fine. Just come get your education. But personally, I think these strategies are going to make a lot of money. I can show you, for example, very good example of a crypto that I trade a lot is CRV. The reason I trade this one is because it has a high inflation, it's like 20% a year in rewards. So you can mine a lot of, you can collect stake in rewards, a lot of yield just from depositing your CRV. Now the current price of this asset is 51 cents, 52 cents. It's had a pretty decent run here, which by the way, my 5-day scalping strategy, I call it, has been able to successfully ride. I think it's going to get out today. It made like 20% in a few days. It's pretty cool. So what I'm saying is this is a dead coin that look at its price history. This is what it's done since its inception. It's done nothing but go down. In fact, since launch, I think it's down like 90%. My short-term scalp strategy is up 10x in the same time period. So while this thing was going down 90%, the strategy went up 10x. So you can trade things that are totally dead, like this one, and still make money because guess what? You don't need uptrend. You just need volatility. And this thing is volatile. Look at this. This thing is this is why I love the strategies, because this thing is up. I think it's 50%, 58% from the low, 40% if the strategy were to exit now. I don't know that how much it may. I think it made 20% because I bought on the 18th. It made like 14, 15%. Okay, maybe it's not much, but it's something. And that the average profit is actually 100%, 99%. Now I haven't checked why that is. It may be influenced by this one trade that was really good. It's like 500x. Yeah, it's 500x. That said, there's like 40 or 50 different trades. So if the average is 99, it could not just be the fact that this one was great, that there's one 500x and everything else is 20%. No, I haven't checked because, again, lots of trades. And so I haven't checked all of them. It's, by the way, full disclosure, 50-50. By the way, when somebody gets these, this is another thing that I'm going to do it here for the people who are part of this group is when you subscribe to a strategy for an asset, you're going to see exactly what you're getting into. Not only is there going to be a video explaining what the strategy is, broadly speaking, you're also going to see for each asset what the historical performance has been. The reason for that is if you don't want to get into something because you don't like the parameters, don't. This strategy works about 40-50% of the time. It's 45 now, used to be 50. Let's call it 45-50% profitable trades. So half your trades exit as losers. The thing is, average return 99%. average loss about 10%. So it's 10 to 1 reward to risk. In other words, yes, you lose about half the time, but when you make money, you make a lot of money. So the strategy itself outperforms. And over the past, I think it's 4 years, 3, 4 years, it has returned 9 times your money. Whereas the underlying, which is really what I'm going for here, is what has the underlying done? What has the strategy done? Strategy's up 9x, the asset is down 90%. So it's night and day. And by the way, every time I run this, it outperforms. And every strategy I deploy, this is why it's gonna take some time for me to fully launch this, because every strategy that I deploy funds on needs to outperform the asset. And I don't care if I have a strategy on Bitcoin that returned whatever 10x in the past 5 years, because Bitcoin's up 30x. So I'm destroying value by actually running the strategy. It needs to outperform. Even if it slightly outperforms or it kind of keeps track, which I've not seen. All the strategies outperform so far, but the one I know very well is this one, the 5-day scalp. Some of the strategies just keep pace with buy and hold, but your returns are smooth. So in my opinion, that is value too. In other words, if Bitcoin returns about 60%, something like that per year, but the returns are distributed so that you make money 3 years, then you lose 80% of your money on year 4. What if I have a strategy that returns exactly 60% every year? Well, that's preferable to me, even though the returns are the same. I think that's called Sharpe ratio by fund managers. I'm not sure what the term is, but if my returns are smoothed out over time, but it's the same thing as buy and hold, then hey, I'm gonna sleep easier at night, and I'm probably gonna be able to deploy more funds if I know that I'm not gonna get stuck in an 80%, 90% correction. So strategies that smooth out returns are also gonna be part of the suite of strategies that I launch on these public trading pools. Sorry, they're called vaults on Hyperliquid. And everything that's on a Hyperliquid vault will also be sold separately as trade alerts, simply because the Hyperliquid vaults are gonna be my money. And with my money, I'm just gonna be very careful of where what I trade. It's probably gonna be no more than 5 to 10 assets per vault, whereas the trade alerts are gonna be dozens and dozens and dozens of crypto trades, of crypto assets that I'm going to track that I'm not personally going to trade. But if you want to, you're going to have all the strategy details, everything. So that's broadly speaking what I want to do. The vault deposit with fiat only. The vaults take USDC. If you're interested, I'll let you know when I launch them. They're all publicly tracked on Hyperliquid, so I'm pretty confident that as people see, oh, this vault seems to do pretty well, it's going to attract deposits naturally. And of course, there's a limitation there because I'm not going to put up that much money on these vaults. It's going to be probably eventually 6 digits each, but I'm not going to go 7 digits on any of these vaults. Somebody wants to trade big and use the strategies, they're going to have to get the trade alerts because there's just no other way. Also, my partner Alex, I think he's here. We're launching a hedge fund too. That's gonna be another. That's like the high net worth version of a trade vault. It's like, hey, I have 7 figures. I want you to manage them. Okay, there's a hedge fund for that. So I'm covering everything. If you have a small deposit, the vault is for you. If you're more do it yourself, you can get trade alerts. If you have high net worth and you want to take advantage of the strategies, there's gonna be a hedge fund as well. And but especially if you just want education and you really like yourself, Barry, I mean, this is probably not for you. You like to do it yourself. You don't need any of these things. You can do it yourself. You've learned a lot, and all of these strategies are based on what I teach. And the monthly classes are going to go over all of these things. What I personally would say is anybody, if you like the scalp strategy, yeah, you're gonna need a subscription of some sort or write your own bots, because even though it's great, I've tried and failed too many times to do it manually, even though I had the actual alerts. Like I've had the alerts for some time. So I did the trading manually, and even that I couldn't keep up with. I just couldn't. Time zone differences, you get alerts at 7 p.m., at midnight UTC. Sometimes at midnight UTC, you're having dinner. You're just not at your debt. You cannot even take advantage of this. And if you get that 8-hour slippage between the alert and the actual placing of the trade, you're going to have very different results, extremely different results, because these are very short-term trades. By the time you get in, you may be actually getting out. Like you may be buying only to get out within a few hours. You have no time to react to these. You have 30 minutes from the issuing of the alert to the actual placement of the trade, which is why I started to write bots, because I could not pass up this opportunity. I said, these are great strategies. I need to take advantage of them somehow. That's when I thought of vaults, and that eventually transitioned into, hey, I should offer this as a service, because it's pretty cool. Best foot forward, as they say. So the vault, I answer that question. Fiat only, it is USDC. So you need USDC. Hyperliquid is a second layer on Arbitrum. So it's its own blockchain. I think it's optimistic rollup. So it's basically an Arbitrum-like chain that runs on Arbitrum, meaning you gotta go Arbitrum USDC, then you deposit into Hyperliquid. The reason I'm launching vaults on Hyperliquid's twofold. One, I want to establish a public track record. It's very useful in what I do to have a public and auditable track record. So Hyperliquid vaults allow me to do that. Second, they take deposits. So, well, there's three reasons. So one, public track record. Two, they take in deposits. So anybody wants to participate, they can. I get a 10% withdrawal fee. So when you come in, you leave your money in, and when you want to withdraw, there's a 10% fee set by Hyperliquid itself. Because if I were to do it, I would do it a little differently, but whatever. This is not me. I would split that two ways: 5 to come in, 5 to come out. That's how Yearn and other DeFi platforms do it. I think that makes a lot more sense. But anyways, 10% standard set by Hyperliquid. The other reason I like to do this is because you can only, from Hyperliquid, you can only withdraw back into your own Ethereum account. So if you have a ledger, if you have a hardware wallet, this is pretty secure. If your keys are compromised for some reason, the only thing an attacker can do is mess up with your trades. They can't steal money from you, because the only option to withdraw is back into your Ethereum address. And if your Ethereum keys are safe and they're secure, then you cannot lose money from this. Again, the only possible attack is somebody wants to mess up with your trades, which there's no incentive for that. Who would do that? Not only that, I think the API keys that bots use do not have withdrawal functionality enabled. So you can't even withdraw if your keys are compromised, which is unlike traditional crypto exchanges, where I've seen countless examples of prop trading firms that have their keys compromised and they lose money. Money is stolen from those accounts. And there's all manner of workarounds that I've seen, where, yeah, the exchange will say one thing and think one thing, but an attacker will find a vulnerability and manage to steal your funds from your exchange accounts from compromised API keys, whereas Hyperliquid literally can only withdraw back to your Ethereum account. So any attack, any compromise ends at your funds are returned to your Ethereum address. So that's a third reason, security. That's why I did it in a Hyperliquid. All right, so let's CRV's up 5-day strategy is better than 90%. Let me read that out loud. So Perry says CRV up 1,000%, 5-day strategy is better than minus 90%. Buy and hold. Absolutely. Now, the point of the 5-day strategy is it needs volatility. It's very inspired by how lackluster this bull market has been. Sharpe ratio allows apples to apples comparison of risky against non-risky. Thank you for that, Perry. So with that segue, speaking about how disappointing the bull market has been, let's get to the meat of the lesson. We'll discuss more if you want on chat. I'm moving in this direction though, but I'll take feedback from all of you guys, and of course you're gonna get these trade alerts, all of you. So yeah, there's no risk for you. You're getting the trade alerts as soon as they're launched. And also remind me to share the Hyperliquid vault so you can see what it's doing. I'm not gonna launch the actual alerts yet because they're bugs. There's a reason the vault is on testnet, not on livenet. All right, so let's go to Bitcoin. And you can see it's okay. Where is this now? We have probably an 80-day cycle low here on March 11. I say probably because it's not confirmed. let me change this FLD because I'm using the actual definition of an FLD versus the one that I personally use. If you remember from lesson, I think it's lesson 7, where I discuss the filters that I use for all the cycles. I use a 10-day filter for the 20-day cycle simply because it smooths out the noise a little better. My computer model, though, uses this one. And honestly, since I'm doing more work with the computer model now, I've realized that if you strictly want to find trades based on the 20-day cycle, you need to use the definition. 20-day duration divided by 4, the displacement, the offset is 2. That will find you more trades. But for visual analysis, I love this one. It's kind of in between a 20 and a 40-day cycle. So it's great for analysis. And I use one of the things, we had the forecast for an 80-day cycle low on the 12th, I believe it was. We have a strong low here on the 11th. So a candidate for an 80-day cycle low. What I look for typically in these extremely, because to me, this is very oversold. Not in terms of price, down 26% is not that much on Bitcoin, but it's been falling for about, it's been falling for months at this point. I mean, you could consider the first high to be mid-December. This is when Murray Armstrong issued this warning, hey, it looks bad, second half of December. He was right about that. And at the same time, I was running my forecast for 2025, and we had a high for, I believe, the 16th of December, which was a minor high. When I ran the forecast using the new data from 24, it was upgraded to a major high. It was a very, very high intensity forecast. Look what happened since. We had another top here. I was checking the other day. We had another top somewhere in here. I believe it was 23rd or 24th, something like that. Double top. Very unusual formation. A double top on an 80-day cycle is something that never happened before. And it's happened a few times in this very disappointing bull market. So it's changing. The way Bitcoin moves is changing. This is why I'm moving toward more of an active trading approach and less buy and hold. In fact, I personally have no funds in buy and hold now. I'm in cash. I sold out months ago too, around this time here, late January. That's personally what I did, and been thinking of how to redeploy funds into the market because I think there's a trade coming. Probably going to be trading only. There's not going to be a buy and never touch, cold wallet, or whatever portfolio hodl. Never. I think that's dead, to be honest, at least for the time being. But we're discussing yesterday in chat how ETFs and professionals may have changed how this market works. I believe that's part of it. I read studies many years ago when I was learning how to trade. There's a lot of people who talked about how markets change when futures contracts are launched, when publicly traded markets are become available, when leverage is added to an underlying asset. The way the asset trades changes. No, it doesn't change the cycles. The cycles never change. The timing never changes. Proof can be the fact that we're using a forecasting model to predict these turning points, which is based on past cycles, and it still works. It's just that the volatility comes way down. And what that means is that the rallies are not as strong, and the sell-offs should be weaker too, but we haven't seen that in Bitcoin. In fact, one of the funny things about Bitcoin is that corrections seem to always stay about the same in terms of price. Bitcoin on a 16-month correction will fall by about 25 to 30%, and it's been that way since like 2015. But the rallies, though, the rallies are changing. And also that 25 to 30% correction takes a lot longer to unfold. It used to take less than a month. Now it takes 4 or 5 months to fully realize that 16-month correction. So it is changing this market, and not in a positive way. Maybe in a positive way in the sense that, okay, less volatility invites more capital, and maybe we'll have a more sustainable uptrend long term. So the capital feels comfortable having taking positions in crypto that last beyond your classic 4-year cycle. Maybe that fourth year 80% crash eventually goes away. Maybe that's what we get in return for having more institutions involved. But the fact that institutions have become involved in this market, in my opinion, has really changed how it works. This was a bull market of a lot of firsts, a lot of things that I've not seen before we're seeing here. And I cannot think of any of them being good, because if you're a buy and hold investor and you like to buy the 4-year cycle low, and you might like to make 20x on your money as that 4-year cycle unfolds, well, this is no longer the market for you. That's just my opinion. I could be wrong, and in fact, I hope I'm wrong. But this is my opinion. This market has changed because, and I'm not basing that on, oh, I haven't made enough money and Bitcoin's still under $100,000. It's the things I have observed that I thought were not. It's things that have happened with the cycles that I did not see before. For example, even though I was celebrating like everybody else, the rally here, the post-Trump victory rally, I couldn't help but notice that this correction was the longest I had ever seen. And by the time we have the breakout, this is a 16-month correction. By the time we have the breakout in November, nothing's going to undo what took place here. The 8 months of nothing is going to take that away. And so I was taking this rally with a grain of salt, even though I fully follow my trading algorithms. I don't have an opinion when it comes to trading. I just follow my algorithms. And so I was just going to follow my strategy. I was worried about this correction here taking too long, but I held because my model told me to hold. And the strategy that I follow with like the bulk of my money so far, that's probably going to change when I launch the bots. But the strategy that I follow is just trade. I just trade the 80-day cycle. Like I said in the last AMA, I just sold everything here. I bought puts. I don't sell it just all at once on a single crossover of a. Let me change the color of this. Of a VTL. This is an 80-day low VTL. Listen, when the 80-day low VTL is crossed, at the very least, the market takes a pause. At the very least, or worst case scenario, it does what Bitcoin did. Crossing of the VTL is a prelude to a crossing of the 80-day cycle, which was here, which is a lot more serious. When the 80-day cycle is crossed, you can have crashes. But even worse so, worse than the crash or the downside that follows the crossing of an 80-day cycle low is the fact that the market does nothing for months. I'm not saying weeks or days. And most people in this business think in terms of days and weeks, and these things take months. Whenever I tell somebody at Wise, because I advise them on the stock market, the trend of the stock market, and they go, "Well, are we about to have a bear market?" And I said, topping out in the stock market takes about a year. It takes about a year for prices to top out, and most people just apparently can't cope with that. I don't know. I'm going to go to the stock market and give you my outlook. But yeah, we're in a topping pattern. Topping patterns take 6 months, a year, 9 months. It takes forever, which a lot of people get comfortable and they think it's okay. That's what happened in 2007. 2007, you can clearly see the market top out. The high is, I believe, February of 2007. But most people refer to the crisis in 2008. Yet in 2007, it was obvious the market is topping out. I believe we're in a similar process now where it's obvious the market is topping out, but we're not going to get a crash. Why? Because it takes a year. Bitcoin, the new Bitcoin, let's call it that, the new Bitcoin takes months to find a low. So back to the 80-day cycle. This is the 80-day cycle, probably kind of confirmed. I have too many lines. It's kind of confirmed by the crossing over of this FLD here. This we don't need. So this dashed line here points to a likely 80-day cycle, and I believe it's going to be a 16-month low too, but it's going to get retested. This is what this line is for. I don't know if it's going to be retested on April 8th, as this arrow suggests. It could be. We will need to look at the forecasts. I invite you all to look at that section and maybe figure out for yourself, because there's a lot of high intensity reversals in this time period, in April and May and June. So it's hard to and that was a feature of 2025. There's a lot of high intensity forecast dates. I don't know exactly. I haven't really made up my mind on exactly when I think this cycle tops out, when I think it bottoms out, when I think it retests. Broadly speaking, the pattern should look something like this, where you have a rally, then you have a retest. Sometime in April, that's where I'm leaning. It could be later too. Why is the videos I'm making, I'm saying June. That's more management of expectations than anything. I don't want them to expect a low by April and new highs by June. So I say it's gonna take time. It's gonna be probably June, maybe earlier. Here for this group, you have access to more tools. You have a more sophisticated understanding of how markets work. It could be April. It could be a very, very short 30-day, 40-day, 80-day cycle. I know that the naming is confusing, but it's just something that this filter is going to pick up. That's all it is. Gonna be a retest at some point of this 78, 80K level. And from there, we rally. I have this arrow here drawn as, oh, it just goes straight up. I don't think that's going to happen, even as prices begin to recover. And we're going to know because we're going to see a higher 80-day cycle low. Once we see the higher low in the 80-day cycle, boom, we're off to the races. And you know that the trend is changing. Just to give you an example, this is what I saw here. And this is horrible correction. But we had this low here, had this 80-day cycle low here in August, and then we have this 30-day long. My model did not pick it up as an 80-day cycle low, but it kind of is. It kind of looks like it. It's actually a 40-day cycle if you count time and use the proper filters. We have this retest here, but the important thing is we have a higher low. So we have a low in August, and notice that up until August, between March and August, we're making lower highs. Sorry, lower highs and lower lows. But importantly, we're making lower lows. But then we start to make, we still have a lower high, but we have a higher low. The next high that follows on this 40-day cycle, it was here, it was a higher high, slightly, but higher. Then we have this, and then Trump wins and off to the races. So the first indication that the trend was changing was quite simply the fact, and this is what I was looking at specifically, is, let me add that one. I was specifically looking at the fact that we have this big crash in August. Then the next time we have a cycle low, an 80-day cycle low, it's a higher low. And then we confirm that by making a higher high. That's it. Recovery underway. It still took, because this was late September, it still took until November. So you had to wait another month. And then we have the actual breakout. The actual breakout was from this range. It was in October. It wasn't when Trump won. It was ahead of that. So it took, we have this actual 320 or 16-month low here. We have it in August. We have the first indication that we're climbing out of this correction in September. We have a breakout in late September, but then we have a proper rally in November. So it took many months before prices could actually climb out of the depths of this correction. Same thing here. It's gonna be the same. It's not gonna look the same. I don't think it looks the same simply because of the forecasts that we have are different. The forecast for 24 did show a lot of chop for many months. The forecasts that we have now, they don't, in my opinion, don't show that. They're very different. It seems like it's gonna be a year more of sharp lows and then big moves following those lows. I don't think we're gonna get several retests of this level here back in 24. If you think about it, this $50,000 to $56,000 level was retested again and again and again. Don't think we're going to see that. We may see again 80K, but then it's going to be chop, like always, climbing out of these corrections. But we may have indications that a new uptrend is forming. We may actually be able to, or at least personally, I may actually deploy some funds at 90, 80, 88 if I see the trend recover. Right now, I think we're heading lower. Just in a very near term, forget all this. The next move is down. This cycle is about to top out. It has zero momentum, no strength. There are no catalysts other than global liquidity, but growth is anemic. And yeah, don't be surprised to see another retest in April of this level here. Maybe after that, we see growth in crypto that's on track with liquidity growth, which means it's going to be weak. It's going to be weak. And I think maybe 150K for Bitcoin by October, November, and that's it. That's all she wrote. All right, let's see if we have, okay, no questions. I'm going to keep moving. Any questions so far? Anything you want to know about crypto specifically? I'm probably going to move to the stock market after this. So if you have any questions, I'm going to give you some time, but then I'm moving on. Let's see. I mean, alts, maybe we should go on alts. I think alts are dead. So why did you call the little blip in October the breakout? Oh, good question, Perry. So basically, I'm just looking at 80-day cycle highs. And And I'm looking at my my computer model specifically. I'm not really doing any of this by hand, as you know, because if I do it by hand, to me, the 80-day cycle low looks like this, just visually. And I'm going by the amplitude of the cycle rather than the duration of the cycle. It's more like this. But my computer model doesn't have it like this. My computer model says that this is the 80-day cycle. It actually lasts 80 days. So it, you know, it's a good model. And so it had this 80-day cycle right here, which means the high that I was looking for, the breakout, was the one in late July. It was all about Trump, by the way. This high is when Trump failed to deliver the goods at the Nashville conference. That's marked the stop, and the rally was all about Trump winning. So it's a Trump cycle, not a Bitcoin cycle. That's a joke, by the way. And so you can see that what I'm looking for is for prices to cross above this 80-day cycle top, which my computer model has identified. This took place, and I need three crosses above it. So we have, technically, we do have three crosses above it here. Oh, no, actually, this is October. I thought it was going to be September. So you can see here that we have three crosses in October. We have 1, 2, 3. Let me zoom in so you can see it better. 1, 2, 3 crosses in October, even more so in late October. So the breakout is this section here when prices move above the 80-day cycle high from July. That is what I call a break. That to me, when I say breakout, I mean specifically this. I mean prices having 3 consecutive closes above the last 80-day cycle top. That's specifically what I mean. This took place in October. It did not take place in November. Personally, what I do typically when I see these like weak-ish breakouts, I'll buy calls. And if I see a dip, I sell the calls and I buy spot. And that's what I did in this section here. And I still had some money left to deploy on election night. And so some of the Bitcoin that I ended up buying was through calls. I think it was 68K. I had calls at 68K. That's how I did it. Like, it goes slow because I go in with very large positions. I don't want to make a mistake, even though it's, you know, historically these 80-day cycle breakouts, 90% of the time there's follow through, even if they're weak at first, like this, 90% of the time you get this rally. That's failed very few times in history. Full disclosure, I think that's going to change now. Now that the market is trading differently, it's going to be different. I think some of these 80-day breakouts will not produce meaningful rallies or tradable rallies. But hey, until that changes, that's still my favorite strategy in crypto. So ETH, we're gonna go to ETH. We're gonna go to Sol. Perfect. Marcus is asking about Ethereum. Let's go to Ethereum next. Solana is looking exactly like Ethereum. So I'm gonna do Solana. Perfect. Do you think, Natasha says, do you think most alts will revisit their all-time highs before the end of this bull run in Q4? I am holding some alts that I'd like to unload this cycle. Missed unloading in January. I think Natasha is going to be about which specific altcoin we're talking about. I think many of them are not going to revisit their January tops. But that being said, I do think that as the 16-month low is in, let's say it's in April, let's just play around with our imaginations here and say, okay, the low is in April. We're going to get a double bottom. This is going to be a 16-month low. Bitcoin will go straight up from there. It will just, I'm not saying this is what's going to happen, but let's just imagine. It goes straight up. It goes above 100,000, blah, blah. It keeps going. The alts will follow. The alts will follow this move. They will mirror this move. Solana, Ethereum is going to go back to maybe 3,000 from 2,000. Solana may revisit 2, maybe 300. Maybe Solana breaks out. It's very volatile. So I don't fully trust my models with volatile altcoins. They can throw you off sometimes, although my base case is Solana's done. Looking broadly before I go into specific altcoins, and ask about other altcoins if you want, because I'm not an altcoin expert. I mostly trade Bitcoin. I trade some alts, but they need to be major, mostly because I trade them with a model. So I don't need them to go to all-time highs or whatever. I just need liquidity, which is typically why I focus on the Ethereums, the Solanas. They got liquidity. I can borrow against them. I can trade options against them. So even if they're not the best altcoins, I don't care. They allow me to trade the way I like. So these are the altcoins. And notice that one thing that I didn't mention, the reason I'm confident this bull market is still on is because, well, my computer model identifies a bear market. It used to be differently. I used to have different methods of finding bear markets, but then I settled on the one method that I think is best, which is the 16-month VTL. Any asset that trades above its 16-month VTL, it's this black line here, and you can see how I drew it because we have this. This is the 16-month low from 2023, first low, second low, the 16-month low from August 24. We connect that, trace that line. I love VTLs, by the way. They're the best tool. And as long as prices are above it, bull market. It could be a weak bull market like what we're seeing now. In bull markets of the past, Bitcoin wouldn't even come close to the 16-month VTL before the end of the bull run. It wouldn't even come close. By the time it got close, it went across. So if I was to judge the market now based on past bull markets, I would say the fact alone that Bitcoin is so close to the 16-month VTL is bad enough. It means we're done. I don't think that's the case here. I just don't think so because this market has been weaker. So you can't judge it from the past. In fact, I think if I drew the old VTL, I'm probably going to get somewhere with this, but you need to understand this first. Notice that we also came close to the old VTL. We came close. We didn't actually cross it, but I mean, when it was 50K here in August, I mean, it was 36, and some people were calling for 36. So it came close. Admittedly, it is closer now. I'm not too worried. I think we're still fine, especially since again global liquidity going up. I mean, I don't think Bitcoin goes down and across this VTL with liquidity going higher. I mean, that doesn't make any sense to me. I think it holds. So I think it's going to get very close to this black line, but it won't cross below it, meaning it's in a bull market still. Alts, before I go into specific alts, same thing for alts. This is just the excluding BTC and ETH, total 3 on TradingView. Same thing. I mean, you can see they're pretty much the same cycles. Difference is the alts did not have a strong 23, whereas Bitcoin had a great 2023. I don't know if you guys remember that. Like Solana, these coins, they break out in late like Q4 2023, whereas Bitcoin was already up 100% from the low. So the alts, the difference between Bitcoin and the alts in this cycle is they do nothing between July, June 22 and late 23, nothing. They're just stuck. By the way, it's a great setting for the 5-day scalp strategy. This is it loves this stuff. It trades constantly. And yeah, half the trades suck, but the other half are great, and it makes a lot more than it loses. So I like these now. I love these. These are great. Then they break out, blah, blah, blah. We have a 16-month low. I think the 16-month low on the alts is actually, it's here. It's right here. It's October 23, exactly the same as Bitcoin, a month later. Then we have the same 16-month low as Bitcoin. Now they're trading in high correlation in 24. They're trading in high correlation to Bitcoin now. And we have the 16-month low here. We have another 16-month low here. We trace out the VTL. Alts are still above it. So to me, that means that alts as a group, as a whole, still in a bull market. But some of them are not. Keep this 16-month VTL in mind. Look at Ethereum. Below the VTL. Bear market. According to my computer model, this is in a bear market, which means there are no trades on Ethereum. If you follow the vault on Hyperliquid, the testnet vault, you're not going to see any trades on Ethereum. It's not going to trade. Why? Because not only did it cross, by the way, there's two ways. The VTL is a great way to confirm a bear market, but if you don't think that's enough, you don't trust that, then look at the 16-month low itself, which for Ethereum took place in September 24. It's below both. Not only that, it crosses below it in late February, late March, making new lows. This thing is dead. It's in a bear market. Now, are there bounces in a bear market? Absolutely. It can bounce. I don't hold any ETH personally. I do hold some Solana, which looks exactly like this. Almost exactly like this, not as bad. I think Ethereum is one of the worst looking assets in this space. Now, I know it's universally hated. And the contrarian in me thinks, well, if everybody hates it, it could outperform. Now, I've been thinking and saying that for over 2 years, and it has not happened. That doesn't mean it can't. What I'm trying to say is, as Bitcoin bottoms out, I think Ethereum has a great run. So, and I don't hold any ETH personally, but I do hold it in the services that I run at Wise, and I'm waiting for this bounce. I'm probably going to sell between 25 and 3. I'm still holding. I care about these people. They've been following me for years, and I want to do right by them. I just don't want to sell their ETH now. We have very low exposure. We unloaded most of it. We still have some. To me, that's the same as being mine. I feel that as it is my ETH, and so I'm waiting for this rally. If you have ETH, I feel your pain. I literally do. I unloaded mine, but it didn't for the service because we trade long term. So I'm waiting for this rally, which I think takes place. I think ETH has a great run before this is over. The question is, and your question, Natasha, is, are they going to revisit the all-time highs from Q4? No, I don't think so. According to my model, no way. And I have no doubts with ETH because it's trading below the 16-month low. And before that, it crossed the 16-month VTL. I mean, that's pretty bad. I will be shocked if this thing makes new high. Shocked. I've never seen that, and I can pretty much guarantee it's never happened. So it can it happen? Yes. Everything's probabilities. There are no certainties. I'd be a billionaire otherwise. But pretty 99% sure this thing won't come back. At least for now. Like maybe there's a ETH renaissance in the next bull market. Maybe they go back to proof of work. I don't know. I think if enough of us keep talking about ETH going back to proof of work, maybe they do it. I can't help but notice that Ethereum's era of underperformance has a lot to do with their switching to proof of stake, which basically makes them comparable to Solana, but worse. And now they made some update to cut fees. It's like they're slashing fees now. Great, they're slashing fees. You're still not competing with Solana because you're slow. So like, and by the way, the whole idea of running everything on layer twos is great. I love that idea. You just need to connect the layer twos, which there's already efforts to do this. The problem is you need a super secure and robust base layer, and Ethereum doesn't have that because it's proof of stake. And the stakers, like, there's two entities that hold a third of the stake, which means it's not even decentralized anymore. This is what happened when they've switched to proof of stake. This is why what I think weighs on ETH. They need to reinvent themselves. Maybe going back to proof of work is not the right way. I don't even know if it's possible, to be honest, to do that. It's what I would try, but maybe they have another plan in mind. If they don't do something, this thing will continue to underperform. And the reason I'm confident in saying that is because it will follow every other altcoin in history that just eventually cannot compete with Bitcoin in terms of price performance. ETH is great. I love ETH. It's my most used blockchain by far. And I think the best applications are still on Ether. I think it has a monopoly on the best applications. But from a price perspective, this thing, I think 3,000 to give some price targets. Not, I don't love price targets. I'm just trying to give you some sense of direction here. We're waiting for a 16-month low on Bitcoin. That 16-month low is going to produce meaningful rallies on Ethereum. Meaningful because it's very oversold. So there's a chance that some bargain hunters go for like the beaten down names, and as that happens, ETH goes for like a maybe it doubles. Notice that if ETH doubles from now, it goes to 3,600. Great trade. It actually would track with Bitcoin, which I think Bitcoin at most doubles from here. So ETH can double too. In other words, it probably does the same thing as Bitcoin, but it will not, even if it double by now, it doesn't go to new all-time high. Actually, to new bull market highs. It couldn't even make a new all-time high. It's very disappointing. So I think ETH outperforms Bitcoin? No. Do I think ETH keeps track with Bitcoin as this move unfolds? Yes. So personally, again, I don't have any ETH. If I did though, I would not sell it now. It looks amateurish, and I realize that you're exposing yourself to, 1,500. Then it doubles and it goes to 3,000. But I mean, even if it doubles, goes to 1,500, and then it doubles to 3,000, you're still selling higher than it is today. So that's what I'm doing at the Wise Services, which is the only quote exposure I have to ETH. Is I'm waiting to unload some of this ETH with my monthly subscribers. I think the weekly subscribers, the premium newsletter, we already got rid of it. But for those guys, I still have it. So moving on, Solana. Let me see if you have any questions. If I recall, let's see if there's any questions on ETH. There has been a lot of shorting of ETH suppressing the price. Interesting to see what happens as this unwinds. Marcos, this is a short-term effect only. The thing you need to look at it for ETH, in my opinion, is this. This is ETH BTC, which always outperformed during a bull market. This high here, December 21, then we have a secondary high, which is very, very significant in September of 2022. This is the merge. The merge. Let me put that with quotes. The merge. That's the merge. September of 2022. Ethereum switches to proof of stake. From that moment on, it's a never stop, like a one-way train down versus Bitcoin, which means sure, it can have bounces. It bounced here. It bounced here. Short covering is not going to create strong type of uptrend that's going to make this thing really outperform Bitcoin. This is not short covering. This is actual deployment of capital. Short covering, I mean, I've been caught on short squeezes. I got caught in a CRV short squeeze pretty bad. And yeah, I was one of the people buying as this thing kept going up. I knew for a fact this was a short squeeze. This was a short squeeze, nothing else. So I knew it would end. And who was buying? Well, people like me and speculators. Two people. ETH, can I have a short squeeze? Yeah, absolutely, 100%. And I think it's gearing up for a pretty large move potentially as Bitcoin bottoms out. But is it going to start a new trend? No, because nobody wants to touch this thing, and that's not going to change because in about 6 months nobody will want to touch crypto in general. So, in my opinion, it is over for ETH in terms of making new highs. In terms of having a spectacular rally before this is over, yeah, I'm looking at ETH as one of those assets that I think is going to do great, but it's not going to make new highs. Let's see, another one. As I recall, Perry, as I recall, Trump's fund, World Financial Liberty, invests millions in a few coins, and those seem manipulated by their comments too, including ETH. Could be, Perry, could be, although I don't pay attention to that. I think truth is in price. So you can just look at price and just look at price. Just look at prices are doing. And I was hearing about Trump buying ETH like here in February or in January. Apparently he was buying a lot of ETH. And what does ETH do? Well, it crashes. Goes straight down. Not only that, keep in mind, guys, that this here, let me zoom in because there's another one. Here, I believe here a month on the 24th of February, it was actually on Friday. On the 21st of February, I think it was the 21st. I think it was here, this Friday. Bybit gets hacked. They get 400,000 ETH stolen from them, about 1.5 billion. They borrow money. Now, I don't know the details of this loan, but a lot of people think they borrowed ETH. So now you have this whale that's short $1.5 billion worth of ETH. And so people start saying, hey, ETH is going to explode. In fact, the next day it actually did pretty well. But look what happens afterwards. It just crashes. Yeah, there's Trump's buying. Yes, Bybit is short a massive amount of ETH. Other people are buying. What does price do? Straight down. So it doesn't matter. I mean, Bybit is probably celebrating right now. That thing is down how much? Like 50% since they 30%. So now they only owe $1 billion worth of ETH. It's great. It's great for them. Now, of course, the flip side is people are saying, well, Bybit is making it go. Right. So Bybit makes it go down, but Trump cannot make it go up. That doesn't make any sense. The trend is down. More people are unloading ETH and buying it. That's the truth you get from looking at price. Speculating on who has what, it's not going to get you anywhere. The fact of the matter is, there was a lot of speculation. ETH will explode now. All these shorts. Now you have Bybit that's also short. Now you have Trump that's buying. And what does ETH do? It falls 30%. So be careful with trying to catch a falling knife. I was even at this conference in Real Vision, the Real Vision conference in Miami. Some guy was asking about ETH, was saying, making the same comments. Oh, but it's a short squeeze, and look at the underperformance, and blah blah blah. ETH is down 30%, more than 30% since that guy made those comments. So it's down 42% since he made those comments. And I believe the advice he got from the guy at the talk, he said, we don't try to catch falling knives. And that would be my advice to anybody trying to just buy right now. I'm not saying don't keep this in your radar. I'm personally keeping this in my radar for a trade. Probably gonna be through options, so I get very limited exposure. But this thing keeps going down. You got to respect the move. It's been non-stop down. Yes, it will reverse at some point because that's what markets do. I mean, we're doing cycles here. Cycles are all about teaching you that markets reverse. When they go down, then they go up, then they go down, then they go up again. But there's a lot of people have been calling for this spectacular rally on this and that and this other reason for ETH. It just hasn't happened. I'm not saying it can't, I'm saying be careful, because if you bought here convinced that some short squeezes happening, you're down 42%. And your best hope right now is you get back to even. So in my opinion, trying to do the contrarian thing and buying things that are way down is just path to ruin, in my opinion. Most of the good traders that I know, they buy on momentum. All my trading strategies are based on momentum. You need to see some type of trend reversal before you pull the trigger. You can't just look at something like this and say, well, I mean, it hasn't done very well, so maybe now. What indication do you have that that's happening? I mean, for now, short term, if I were to buy ETH, which I'm not through my automated strategies, because like I said, it's in a bear market, so my model stays away. But if I were to still deploy funds, there's a 20-day cycle high here for ETH, clearly. You can see from the FLD, crosses above it, back below it. The 20-day, buying 20-day breakouts on ETH is a pretty good strategy. It actually, it works pretty well. And I think it can work in an early stage bear market like this. This is early stage bear market. This is not full on bear market yet, because Bitcoin is still in a bull market. So my view is this is early stage. You can still dip your toes. I would look for that breakout at the very least. This breakout, 2000, like let it close above 2100, and then maybe you have your move. Especially if you have, sorry, I need to get some water. Let's say it doesn't make, let's say it doesn't make any new lows here, it holds, and it goes like that. Like not only does it cross above the 20-day cycle top, it does so with conviction, as I like to say. So 2200 without making a new low. Now you have a double bottom, which you haven't had, and you have a breakout of a 20-day cycle high, which you haven't had. Okay, that's a tradable setup. And if you're interested, if you have this view that, okay, this thing will explode because there's a lot of shorts, which is not a bad, I don't disagree with that. It may well happen. So that's your trade setup. This is just what I would do. I would not pick it up here. There's no reason to. For all I know, it keeps making lower lows and lower highs on the 20-day cycle without showing any sign of an 80-day cycle. Look at this filter, straight down. It's horrible. An older version of my model would actually place an 80-day cycle somewhere in this correction, just from a time perspective. You need to have it. It's been 185 days. So an older version, this is Hurst's pure orthodox teachings are, if enough time elapses, you got to find a low somewhere here that your tools are not picking up. I've moved away from that. I disagree with that view. It gives me more information to know that it's been 185 days and we have not seen an 80-day cycle rally. That gives me information. It tells me this market is heavy. There's a lot of selling, and I don't know why. I can't make sense out of this. Fundamentals for these are good, but gotta respect the move. All right, so Perry, what is this? These ETH sellers? Well, I can't download that. Grayscale Trust, Financial World Liberty. Are these the ones that they're buying? Anyways, if you want to explain that later, I'll address it. Do you think new regulations for DeFi will give ETH and Solana better support from institutions? Yeah, that could happen. It's not going to rescue this current bull market. That will take years. But yeah, sure, it might. Now let's move on to Solana. Very similar picture. Notice a black line. I just made a video on this recently. Notice a black line. The red. Let me actually change the color of this. There we go. The dashed line is the all-time high, the 4-year cycle high from November 21, and this one is the current one. I was trying to show that it's kind of a double top. This red line is Solana's 16-month low. The thing I like about Solana is it remains above it. Not for long. It's already dipped below. And this doesn't look good. But it's still above that low. So there's hope, I would say. My model, though, already calling for a bear market on Solana. Why? Because it's had all of this price discovery. I don't know if that's the right term. Below the 16-month VTL. It's just as dead as ETH, in my opinion. I hold no Solana. I have no exposure. I sold it all. I mean, I hedged when it broke the 80-day cycle VTL. This one, repaint this. I always paint these in orange. So we have the 80-day VTL. Let me just make it clear. 80 VTL. We got that crossover. And then the same move that crosses below the VTL, you got the other crossover. You got the 16-month VTL. So you have both moves within the space of a few days. Super negative, in my opinion. Sold everything. I hedged here. I sold everything here. No Solana. Done. Longer term, I've never held the view that Solana is good as a buy and hold asset. And the reason for that is it's a technical reason. They're subsidizing their validators with inflation. So it's actually quite an inflationary token. The fees are so low in Solana. I think that's changed recently. There's been a surge in activity, but it's still true that Solana, by and large, is subsidizing with inflation, which makes it not too different from the likes of Usual, a great real world asset project. These are the issuers of USD Zero, which is a stablecoin backed by T-bills. Fantastic project. Look at the price of this thing. It's down like 99% already. So fundamentals are fantastic. Problem is inflation 90%, not down 90%. This thing has an inflation rate of about 150% annualized. I think it's 100%, and then there's another 50% that's just fees and distributions. But it's a 100% inflation, and price responds accordingly. It's down 90%. CRV, the reason it's down 90% since inception is has a 20% annual inflation rate. For all the fundamentals that people keep citing for why a project may be good or bad, the one thing that I've noticed that's very consistent in crypto is that any asset that has a high inflation rate tends to go down beyond hype. So it can be hyped. CRV was very hyped at first. It had DeFi summer, had everything going for it. It did great. It had all this run. Actually, it launched at like $6 and went straight down, never recovered. It went back to $6. It had a good run though, 36 cents, going to $6, DeFi summer. But then gravity sets in, and the fact that there's oversupply drags on this asset. The whole reason to own CRV has to do with that inflation. So there's nothing beyond inflation for this one. Solana is not the same. It has an inflation rate of, could be totally wrong, but I think it's like 6 or 7%, and it does go down over time. But that inflation, it's bad enough. It's bad enough that I think will drag on the asset, unless the network switches to a fee-based, purely fee-based revenue like ETH. Like ETH used to be. I don't think it's there anymore because they're trying to compete with Solana. They just make it worse because they lowered fees. But back in 22 when they were a proof of work chain with relatively high fees, I mean miners were making a killing. And so it was very well supported, and it was a deflationary. So it was a deflationary asset, and miners were making tons of money from fees. Well, it wasn't really fees. It was more complicated. They had the issuance, and then the fees would get burned. That resulted in a deflationary asset with miners making a ton of money. And so it was a good ecosystem from that base layer point of view. Solana is not nearly as healthy, in my opinion, and neither is Ethereum. So that's why I said, Marcos, I think this has to do with proof of stake and how fees are distributed and the costs associated with running a proof of stake validator versus running a mining operation. I think it's just it changes the fundamental supply and demand dynamics of these assets, and it makes it so that price just goes down. Nobody needs ETH to stay high. You just hedge the principal and you collect those fees. Same thing with Solana. With high inflation, you just hedge the principal and you collect those fees. It's the same thing that's happening. So that's a lot of selling, a lot of constant selling of the asset that it enters the market, and it's not met with any bids. So the price just keeps going down. It's like a miniature version of what you're seeing with CRV, usual, great fundamentals, horrible supply demand dynamics, price goes down. They're tradable assets, but they're not buy and hold. Solana, for me, was never buy and hold. So it was a lot easier for me I was more of mercenary capital. I just appreciated how well it was doing. That's why I held Solana. The moment that changed by crossing below this VTL and then the other VTL, I just dumped everything. I'm not coming back. I traded, great asset to trade, not coming back unless I see that, yes, most of the revenue comes from fees and decentralization. These things matter. This is why I think Bitcoin's doing so well, because it has a very robust base layer, whereas all these copies, they don't have that. None of them have that. They're not deflationary. I mean, Bitcoin isn't even deflationary. It's just the fact that it has deterministic monetary policy. It's not going to change, and it's proof of work. I think proof of work makes it solid. And I know I can't prove that because a bunch of proof of work coins are dead. A bunch of them are not, though. Like, I don't know. I think I have Monero here. Monero is pretty stable. I mean, look at Monero. Look at it go. This is a great asset. Proof of work. Nobody looks at it. No bear market. No sign of a bear market. Hasn't done anything in years. That's better than some of these coins. It's still around. Proof of work. You know, I think it has finite supply, but I could be wrong about that. Has a solid use case, which is a privacy coin. Privacy proof of work coin. Great base layer. It's doing okay. Yeah, I wouldn't be surprised to see this thing surge again. What weighs down on Monero is the fact that most exchanges don't allow it because of the privacy, because terrorists can use it literally. And so it has that downside. But from a base layer perspective, it's robust. And you can see it in the price action. ETH changed how its base layer works, and now it looks like crap. Solana, I think it was mostly lifted by hype that is now morphing into, okay, it does have utility, it does have real users, has millions of daily active users. I like this chain, but I've not seen anything yet that convinces me that when an asset is oversupplied, price goes down. I've not seen anything to convince me otherwise. I believe, I have a strong view on crypto. If an asset is oversupplied, fundamentally, meaning they print too much money, this is what Solana does. They print too much. It just goes down. Over time, it goes down. There's nothing. It's like time value in an option. I mean, if you buy calls all the time, you're gonna lose money. Why? Time value. It just keeps draining. If you print too much money, the value of that currency, in spite of short-term fluctuations, it keeps draining. Partly why I'm in crypto. Fiat currencies oversupplied, fundamentally, systematically oversupplied. And so it's never going to go up. You should never have your savings in fiat, except, oh, there's deflation coming. Okay, buy some dollars. Beyond that, that thing will keep losing value, period. Why? It's oversupplied. Crypto is not immune from that. These assets that are oversupplied, they go down. They're not great buy and hold investments. Okay, AVAX. Well, I went way over time. Apologies for that. Let's go to AVAX. Avalanche, I don't know much about it, Marcos. I don't know a lot about Avalanche, beyond the fact that I like their consensus mechanism. It's one of the best in the industry. So I like that. It was created by people who really, really know cryptography. So that's great. Um, Fundamentally, I'm just going to look at my model and I want to know every time I look at an altcoin in this setting where a bunch of altcoins have already crossed below their 16-month VTL, I just want to know if I look at an altcoin, I just want to know where is that 16-month VTL. In this case, it's right here. Avalanche has crossed below it. Therefore, it is in a bear market. Kind of looks like Solana. I don't think it has really crossed below the 16-month low. Now you can see it here. It hasn't really crossed below it. It's about to. So I don't like this asset either. Anything that looks like this, I don't like it. Oh, Athena is another one of those oversupplied assets. I don't like this one either. It hasn't done anything. Super high inflation. I think it's like 30%, 40% per year. This thing is going to sub 20 cents and it will never come back. Unless they stop printing, which for now I think they will. Before I wrap up, I do want to go on TradFi a little bit. I got Sui, still have some exposure to Sui. It looks pretty good. Look at the 16-month VTL, way below. I think there's a decent chance when Bitcoin picks up, Sui goes to new all-time highs with whatever hype is left in crypto before the end of the bull market. I think Sui has a decent chance at making some spectacular moves. I would tend to gravitate toward these ones, and the ones that are not below their 16-month VTL. They look more robust from a long-term cycle perspective. The ones that are below, I would stay away. I mean, personally, I do stay away, and I have back tested these things. When I say would stay away, I'm not just making stuff up. I literally I've written an algorithm that evaluates all trading strategies in all market trends, and unequivocally, what I get back from the test results is if there's a bear market, which is defined by prices being below the 16-month VTL, you should stay away from it. That's what I get time and again. There are some exceptions, but typically if I run simulations on 10 assets, 80% of them, I get back the result that says stay away if it's a bear market. So I stay away. Because even if there are exceptions, it tends to happen with newer altcoins where there's probably not enough data to make that assessment. If you run that simulations on Ethereum or Bitcoin or BNB, BNB is another great one, by the way. I forgot to mention this one. This one looks amazing. I don't even know why. Apparently, BNB is very well supported. I don't even this I think has to do with manipulation. You can't even see cycles in BNB. This is Binance Chain, Binance Coin. Binance will buy up a lot of the supply. So it's inverse from what you see with other assets which are oversupplied. This one's sort of undersupplied. So you can see the dynamics. You can see how that affects price, where BNB hits a new all-time high. When was that? It hits a new all-time high in June 24. It rallies to a new all-time high in December, and it stays there. So BNB is another one that I like. Great trend, very solid. Again, I don't care why this is happening. I do believe it's because Binance buys back a lot of this using their revenue, and it supports price. Tron is another one. Both of these are Chinese. I don't know. There might be manipulation here. I'm not sure. Doesn't have to. I don't care, to be honest. I don't know why Tron is so well supported. This is one of the few assets I can think of that's been around for a while. I mean, this is an OG in crypto at this point. This is a bull market top from the last. This is the last 4-year cycle high. Look where it is now. Not even Bitcoin is doing this well. Not even Bitcoin. During this entire correction, the thing is barely down. In fact, if you forget this was Justin Sun, the founder of Tron, tweeted some bullshit about XRP, and the thing went up. Literally, I should have sold because I have a bunch of this. 96, it doubled. He made the price double with a tweet. That was entirely erased. Get rid of this. So forget that. Forget that tweet. And Tron is still holding on to the gains from the Trump pump. And this was, again, this was just bullshit. He was just riding the wave of hype. Maybe he sold. Who knows? Looking great though. It looks great. Um, I don't even know where the 16-month VTL is for this one, but it's probably way below price. I think it's somewhere in here. Somewhere in here must be. I mean, I would need to check with my model to see exactly the points that it connects, because sometimes I think I taught that in lesson. I don't remember what lesson it is. Probably lesson 3 that I teach you that sometimes you can't quite. You gotta fit the VTL. What I wrote an algorithm to fit the VTL. Sometimes it doesn't quite fit if the trend is too strong or too parabolic. Uh, this is what you want your crypto to look like. Straight up, still up, making new bull market highs, holding on, barely down, while the rest of the market is crashing. This one looks good too. These are the only two in my radar that I hold. I continue to hold. I'm not going to add to my positions. They're small positions, but they look good. This is the type of type of chart that I would like to see in an altcoin to decide, do I want to keep it or not. Let's look like this. I need to see new all-time highs. I don't want to see strong, very, very deep corrections. I want to see them hold. To be honest, between Tron and BNB, I like BNB more. I think this. I don't understand why Tron does so well. I understand that here in the developing world, most people use Tron to move stable coins around. So that's a very solid use case. But I don't think that's enough to lift prices. Maybe it is. BNB is basically like a Ethereum Solana version that's much less decentralized, but there's actually somebody buying it systematically, unlike the other two, where you have just constant supply overhang. This one is the opposite. Hype from Hyperliquid. Perry's asking about Hype. All right, let's look at Hype. I don't actually trade or own Hype. I know it did well when it launched. This is probably not the best way to get history from this. Apparently it is. When did this launch? It was late Q4. Yeah, okay. Let's assume this is the chart. The thing about Hype is, well, I like the product. Obviously, I use Hyperliquid. It's my favorite exchange. One of my favorite exchanges. The other one is I love Bybit too, even though they got hacked. I really like that exchange. Hype, I would have to be my favorite decentralized, quote unquote. It's not totally decentralized. You do, however, have to sign your transactions with Ethereum keys and blah, blah, blah. And it took me a while to learn how to do that. It wasn't easy. It's not just an API key. It's an actual Ethereum address you have to manage. So that was tough. It took me a day to figure that out. I don't know. I like the fact that this is not VC funded or whatever. It's like bootstrapped. It's one of the few prominent crypto browsers that is like actually bootstrapped. Not only that, the product is kick ass. It's amazing. It's so good. It is as good, if not better, than DYDX used to be. And DYDX totally just moved in a completely stupid direction, and it's a dead project now. But these guys are doing it right, in my opinion. So I like the fact that there are no VCs, there were no pre-allocations, there's no supply overhang from what I can tell for Hype. So maybe it goes up. Maybe it's allowed to go up because it doesn't have all of these VCs dumping onto retail, which is far too common in cryptos. I hate that. It wasn't like that before, but it is now. However, I don't know what the distribution schedule looks like. Does it have a high inflation rate? Is there a place where you can stake? Here's the thing, guys. I mean, if you find, oh, look, I can buy Hype and I can stake it and I can make 20%. You know what that means? That they're printing 20% per annum. That's what it means. That means if you want to make money from Hype, you should stake it, hedge it, because it's going to go down, and then hedge those stake rewards. So what looks good for you looks good for everybody else. So these rewards, oh, great rewards. Look at that 80%. That means an inflation rate of 80%. You need to find out where are these rewards coming from? Oh, it's the token distributions. You know how they fool some people? This is super funny because I had this comment on a Wise live stream that I made, and somebody said, well, not really. Only 5% of the supply is floating. And I said, it doesn't matter. they're distributing relative to supply about 20 or 80%. So the inflation rate currently, I don't care if 90, because they say, this is how they fool you. They say 90% of supply is locked. Who cares? That doesn't matter because those funds cannot move. If you have 5% liquid supply and you're distributing the other 5% per year, guess what? That's an inflation rate of 100%. You're doubling the supply, the available, the actual real supply. You're doubling it. That means high inflation rate. That means price will tank. So, long story short, I don't know. Hyperliquid does everything right, says Perry, but the token itself isn't doing as well as the exchanges. Curve is awesome too, Perry. They're doing very well. Curve, I know Crypto OG is one of the most secure dexes in the planet, and it's the go-to place for stablecoin pairs. Token sucks. I mean, it's just awful. Athena has, I think Athena, they're the issuers of the USDE stablecoin, which it buys Ethereum and Bitcoin and hedges through swaps and distributes the trading rewards. Amazing idea, amazing project. 30 to 40% inflation rate, don't touch it. You're never going to make money from this. I mean, unless you, again, do what I do, which is you buy it, you hedge it, and then you stake it on Pendle because you get fixed yield, and then you hedge that too. That's how you can make money with these. You're not going to make money just buying it. By the way, I think of these VCs and prop trading firms, I think they're making a killing from all these tokens because they're doing what I'm doing. They're collecting yield and unloading risk onto someone, because when I short Athena, somebody's buying Athena. Who's doing that? Who's buying it? I don't know, but there's plenty of supply. So great fundamentals. The token will never track that performance. It can't because there's too much inflation. Usual is another one. I mean, a stablecoin that's backed by T-bills. This is every bit as good as owning T-bills on the blockchain. That's what these guys did. It's a real world asset project, down 90%. Why? 100% inflation rate. I think eventually that changes because eventually they distribute the whole supply. And if they release only 5% per year, I'm making these numbers up. But eventually, if you have 50% of the supply already there and you're still unlocking 5%, then yeah, that's an inflation rate that went from 100% all the way down to 10%. Now it's not so bad. And if you wait another 20 years, maybe it has no inflation. Great, you have to wait 20 years. By then, the price is basically 0.00. It's a fraction of what it is today. So today, you stay away because you cannot make money from these. I mean, I built up a position on this one, usual, a while back in February. I'm shocked. I mean, the thing is, it's down 50% already. It's incredible. Not surprising. It's probably one of the most inflationary assets in the space. So yeah, to answer your question, Perry, I don't know if Hyperliquid doesn't have that issue also. I would look to see. You can ask an AI. You can ask Perplexity. I use it for search. Perplexity.ai. Shout out to AI. You can ask, hey, does Hyperliquid distribute token, or does it have staking rewards? How high are those staking rewards, and what is the origin of that reward? You can ask it exactly that. I've done it with other projects, and it will search for you and it'll tell you. And most of it, I would 90% of the time, you see high staking rewards, like 20, 30, 40%. That's not revenue. That is not revenue, with some exceptions. Typically, that's inflation. If you ask, it's inflation. And they don't trust the project because they go, well, usual, the most inflationary token, or one of the most inflationary tokens in the space, they go, this is a value token. You get platform revenue and high staking rewards, value. That value is, they destroy 90% of their value in less than a year, like 6 months. Why? High inflation. So inflation beats everything. This is why we're in crypto, because inflation is bad, and so fiat goes down. This is the same thing is true in crypto. The same thing is true in crypto. High inflation, things go down. Period. All right, I gotta run, but I do want to go to the S&P. Stagflation. Yeah, Perry, that's it. And if you want to not get killed by that inflation and make money from these projects, you can. I am involved in Athena. I am involved in Usual. I am involved in CRV. And every time I see a blue chip, DeFi project that has a token, I'm involved. But I've learned already how to play that game, which is you buy, you hedge the principal, you collect the staking rewards. I'm not even recommending that anybody do this because it's a sophisticated strategy, and every single staking scheme has differences, little differences that you got to spot in order to know how to hedge, because you have to hedge all of these dynamically. It's not one-to-one. It's not $100 and then sending $100 worth of usual, for example. That's not going to work. You have to study specifically how that distribution works, learn it specifically. Sometimes you have a lot of prop trading firms doing the same strategy, which means there's a cost to that hedge. So you got to figure out, does it make sense? Should I hedge this? Is this taking reward? Is it higher than the hedging, than the price of the cost of the hedge? This is the case in Athena. Everybody's short Athena. Everybody's short Athena. Because everybody's collecting those high staking rewards and nobody wants the price exposure. So be prepared to pay about 10% annualized for hedging Athena, which means you can make 20% on CRV, which is not nearly as shorted. You can make 10% just hedging CRV. You can make 10%, and that's on top of another 20% from the staking reward. So that's 30% total. Athena on paper looks better. It pays about 35% staking reward right now. Problem is 20 to 25% cost to hedge. That leaves you with 10 to 15% return, which doesn't come close to CRV, meaning Athena, not that good. Usual, from what I've seen, is pretty good too. You have extremely high staking rewards, 100% currently. It's actually 140% right now. It's absurd. It's absurd how high it is. No cost to hedge. It's about 10% annualized. Apparently not a lot of people are short. I don't know. I don't understand that. I'm a little suspect. But even if it was a 20% cost to hedge, you're still making 80%. The problem with usual is you have to stake it. And once you stake it, if you want to unstake it, boom, that's a 10% fee on top of that. So if you have $100 and you deposit $100, once you withdraw, you only have $90, which means once you buy and stake, you need to wait some time before you actually get your money back. The moment you stake, you're down 10%. It's a private, I looked into it. It's a private liquidity pool that I'm pretty sure they're running. So they're skimming off their customers constantly because oh, great staking rewards. You want to get your money out because the token is down? That's a 10% penalty. And they're making money while everybody else is losing. Now, if you know how to play that game, you can make money. But what I'm trying to say is all of these high inflation tokens have their own little schemes, and you have to understand them before you go in. So not recommending this. Do your own research. If you want to do this, play this staking game because you can get burned. I have gotten burned. I think I'm up on balance. I am definitely have made money doing this, but I've learned to be careful because there's always fine print. There's always a way for them to make money. I mean, the issuers of the coin, which is why I've learned that these guys are making money. They don't give a fuck. Sorry for the language. They don't give a shit that the token is down 90%. They're making a killing on those tokens. Fees, staking rewards, inflation. They're making a killing. They probably exempt themselves when they want to unstake. With the usual, it's so funny. It's like, oh, well, you have 1,000 usual tokens. Okay, I want to get them back. Oh, sorry, you have 900 usual tokens. Where did the other 10 go? Oh, the other 100? Oh, they keep that. And they sell it at market the moment they take it from you, sell it at market and collect those fees. So these tokens going down, it's almost as if they're designed to go down. They're making money off of you. That's what they're doing. Anyways, yeah, the house always wins, but you can be the house. That's the thing about crypto that I still love. You can be the house in crypto. You can do not what they're doing, because it's a private liquidity pool. Like, what the fuck is that? But like, for example, with CRV, you can participate in those liquidity pools. I think it's the most fair. CRV is probably the most fair distribution scheme. If you want to make money from CRV, you very much can. With the others, there's always a scheme. But there's always ways to play it too. I've made money on Athena. I've made money on CRV. I'm getting involved in usual now. I haven't made money yet, but I will. I just have to wait. I just needed to understand how the thing worked. But right now, I'm just down barely on it. Actually, I'm not even down because the price is down so much. that I made so much money on the hedge. I don't even care. But I lost money on the stake because of their schemes. That's why I call them. All right, track markets. Before I go, I got like 15 minutes. So the most important one to me is the stock market, obviously, and this is the most important market in the world. This is what lets you know what's happening with the global economy, because a lot of the people who participate in the U.S. stock market, they're not even American. They're not even American based. So this is the world stock market we're looking at. And remember what I taught you about how to spot a bear market in lesson 4, I think? No, 4 is, no, yeah, lesson 4. Lesson 4 is when we go over the stock market. And we have the double VTL rule that I call. Let me tell you the last time the double VTL rule triggered. Let me show you that, and then let's go to the present. There's a 20-week cycle in the stock market, which I don't remember how we track, but I do know this. The same the same filter to track the 80-day cycle on crypto works. It pretty much works for the stock market. So I don't remember exactly what it is. Apologies for that. As you know, I don't trade a lot of TradFi, but bear with me. There are a bunch of 20-week cycle lows here. There's one here. There's one here. And the other one was like way back here. Remember what the double VTL rule is. If you want to know if a bear market is coming in the stock market, what you do is you calculate that 20-week low VTL, you wait for a single crossover. When prices cross once, my computer model, which I don't run it out every day, but I do have the algos set up for running on the stock market. What it does is if it crosses the first VTL, it goes neutral. Then the next VTL, meaning you have this double VTL rule is set up with 3 lows. 1, 2, 3. With 3 lows, you can draw 2 VTLs, consecutive VTLs. This is the other VTL. This one here. Okay, 3 lows, 2 VTLs. You want both to be crossed. When that happens, bear market. And you can see the crossover here. I also teach in lesson 4 that if the VTL is downsloped, it has a downslope, it's tilted down like this, like you see here, you can replace with the actual 20-week cycle low. All right. And you can see here in this case, in 22, it made no difference. Like both were crossed. I mean, the first one was crossed on May 6 if you use the horizontal level. If you use the VTL the next day, you get the same signal. But you can replace, I recommend you do. The way you know this is quite simple. You know already ahead of time, hey, this VTL is tilted the wrong way. I'm not going to use the VTL. I'm just going to use the horizontal level. And on May 6th, actually on May 2nd, there's no noise almost in the stock market. None. Almost none. So a single crossover is bad enough. There's no need to wait 3 days or anything. That's what I like about the stock market. It's like, okay, it crossed my level. That's it. I don't need to wait. I don't need to confirm this at all. And so already we know early May, depending on which method you use, but in early May, you know, there's a bear market. Now, it doesn't say anything about the how do I say that? The intensity of the bear market. It could just be weak, like this one. Fundamentally, I believe this happened because of COVID, which took place a few years earlier. The reason you saw this in COVID is not just the news was bad. Yes, the news was bad, but also the VIX was at all-time lows during this period. Here, and during this period here, it was at all-time lows. What does that mean? Nobody's hedged. Nobody has any hedges going into COVID. So it's straight down. It's people selling, selling, selling. In fact, there was a bunch of people who were short a bunch of puts. That's why the VIX was at all-time lows. So this was also a technical sell-off. It has to do with the fact that the market was positioned in completely the wrong way. The market was not positioned for this crash. Why is this bear market not nearly as bad? The market expects a bear market in 2022. Everybody's hedged. I don't know if you remember, but the VIX stayed consistently at high readings. It was like 20, 20, 20, 20. It would always stay at high readings during this bear market. As a result, nobody needs to sell. Nobody's panicking out of the stock market. What you get is a weak bear market. Regardless, you can spot that with this method of the double VTL. And full disclosure, that method did not work during COVID. It did not work. There's no double VTL. There's just a single one that gets crossed, and it didn't work. Actually, I'm not sure it didn't work. Let's check. Let's find the 20-week lows. It's one here, one here. I guess, yeah, the next one is probably here. And we can draw the VTLs. This is doing it for the first time. Maybe it worked because I'm looking at it now. It feels like it did. There we go. Got one there. And so that one's crossed. And then you have another one. I'll be honest with you. I negate this signal when I go to any all-time high. So during COVID, we have this crossover here. Then we have the second 20-week cycle low. You draw the VTL, and ideally, what you would want to see is for prices to fall below it before prices go to a all-time high. Because that I'll be fair, I think that negates the signal in most cases. It is funny though that if you do that, both VTLs are crossed consecutively, and it's a bear market. So it's not. By the way, this is not a bear market. This is just a brutal sell-off that lasted for a single month. I don't sweat this one too much. I was actually trading the stock market here. I was short puts. I bought them back early March. I just bought everything back. It was clear that something bad was happening. So I sold everything. Models can fail. And to me, this was one such case where the rules that I normally use, because again, I negate the signal if it goes to the all-time high. I might reconsider that. I think it's reasonable to say, hey, 3 consecutive 20-week cycle lows. If the two VTLs are crossed, regardless of circumstance, it's bad. You should sell. Why am I saying all this? And by the way, this happens every single time there's a sell-off. I went through that in lesson 4. I showed you every time this happens. You don't always get a bear market. Sometimes you just get this, like a bad sell-off, or particularly here in 2018, you get a bad sell-off. Not really a bear market, but it is a bear market signal. Why am I saying that? Because we're close to the same setup, in my view. We have a bunch of 20-week lows here. There's going to be, I'm going to highlight these 3 that are confirmed. And there's a 4th that's forming. There's another 20-week low that's forming here. Notice that it's on March, where is it? March 13. And remember that the forecasts that I have for Bitcoin, they work across assets. So this is the 20-week cycle is the equivalent to the 80-day cycle in crypto. So I think this is probably eventually will be confirmed as a 20-week cycle low. For now, it's not. Let's say it is. Let's say it is. So is this the same setup as COVID? Well, no, because we have, well, maybe it is. Let's check. We have this, and we have, oh, actually it is. Look at that. It is now. So it's the same setup as COVID. I wasn't sure if it was or not, but I wanted to highlight this. We have a double VTL crossover already. I don't know if this is not this might be a 20-week low. Apologies, don't keep track with this. I actually think, no, if you know what, forget that. This is a 20-week cycle low. So the setup is not exactly valid because we have the first crossover. I was raising alarms here. Then we have another 20-week cycle low here, which means, and that VTL was not crossed. So because it runs up to the, apologies for the confusion, but it runs until the next 20-week cycle low. So the signal is negated. We are not in a bear market. However, we have this VTL now. This one. We have this one. It was already crossed. We have a potential low here, which means we're going to have a tilted VTL, which means we can't use the VTL, which means in this setup, we're looking for the next 20-week cycle low. We already have the VTL crossover. We got that. Let's delete these. because for a moment there it looked bad before, but now I think we're saved. Stock market saved itself. Again, I think unless I need to do a proper study because I can go back decades. I would need to do a proper study to see if the any all-time high negates the double VTO rule. I'm thinking maybe it doesn't, but I don't know. Let's say it does. Current setup is this. We got this VTL crossover here. Now we're looking for the next 20-week cycle low, and notice that prices are so below the 20-week cycle low, which is not in my studies. It's not really a bear market signal. Margot, I think I don't know if you're here. I don't think she is. She was here for a while. There are some cycle analysts that consider that to be bearish. In my opinion, it's not. But now that we have this setup where we have the first VTL crossing over, and that we know that the next VTL is going to be tilted, we know that we're not going to use it. We're going to use the horizontal level instead. And so now, once we confirm those low, which we have not yet, but if we do, we got a bear market in the stock market, which I think would line up with a bear market in crypto as well. I mean, we're probably months away from this. I don't think it's going to happen anytime soon. If notice that if prices keep crashing, we don't have a 20-week cycle low, and we don't have a VTL yet, or a horizontal level. So if prices keep crashing, we're not going to get a bear market signal. They need to recover. They need to form a low. This is what I'm looking for now. And once that low is formed, then we can draw that line. We can paint it red and say, okay, if prices cross that line, we're done. It's a bear market. So it looks iffy, the stock market. It looks iffy. I'm keeping track of this. Because if we get a bear market in crypto and in stock market, it's gonna be much worse in crypto. And last but not least, because I gotta go, gold is another one that I wanted to look at. This is basically going to. There's not much to look at here. I ran forecasts on gold a while back in September of last year. Well, I was at a gold, not gold, it was a market forecasting conference. And there's an overdue 18-month high in gold sometime, not in August, sometime now, sometime in April. So we're coming up to a critical date here in gold. However, this is an 18-month reversal. It's an 18-month correction. It may take a few months. It doesn't have to happen in April. It could happen later. But it's overdue. We haven't had an 18-month correction since this one. This is the last one we had way back in 2023. So it's way overdue. All we have had in gold are these 20-week cycle pullbacks. They're all buy signals. You can use the FLD for that. This one. I know it's not the exact setting, but it's close enough. When you see the prices pull back to the FLD and back above, buy signal. I bought all these. I bought this one. It worked. Bought this one. It worked. Bought this one. It also worked. Now that we have the 18-month coming, I don't think it's going to work. But once the 18-month cycle points up, every pullback down to the FLD and back up is a buy signal. And they mostly work. However, the longer term outlook on gold is we have this here. It's a 7-year low. 7-year low. 7-year low on gold. 7-year lows means, and this is in 2022, October 22. So we should expect a low by 29 or 30, meaning between now and 2029 or 2030, prices will continue to go up. So, which means my outlook for gold is, okay, there's an overdue, clearly overdue 18-month cycle pullback. It may go back to 2,500, 2,600. From there, the uptrend continues. And it will continue pretty much like this, like what we're seeing now. This is a great time to be involved in gold. Really great. In the very near term, I will be cautious because I think you're gonna have that 18-month that 18-month high followed by an 18-month correction. That correction is gonna be, okay, it's gonna be significant. But after that, great opportunity. I have trades on gold that I plan on selling probably in April. If I see I'm not even going to wait for an indication of a high. I'm just going to load my positions because it's clear now it's overdue for a correction. So the moment I see a crossover of this FLD, I'm out. I'm just going to get out. And I'm going to wait for a meaningful pullback. I don't know off the top of my head how much prices go down during an 18-month correction during a bull market. I think it may be 10% or something like that. Yeah, 10, 12%. After that 10, 12% correction, boom, you have the same setup again. I actually teach the setup in the course. Lesson on gold is lesson 5, I think. And it's basically just drawing the 20-week VTL. Once you've confirmed that you're in an 18-month cycle correction, that I actually shot the lesson exactly as this was happening. I had bought gold a couple of days prior to shooting the lesson, and that's your buy setup coming out of an 18-month cycle low in a bull market, which is what we have here. So gold looks great, but in the very near term, correction warning here. But that's just yet another great buying opportunity for gold. All right, so before I go, I'm gonna go through your stuff, Perry, and then I'm gonna go because I gotta run. So Perry says, before we go, can you comment on our upcoming predictions? 329 tomorrow is a big high. 47, 10 days is a big low. Perry, it's what I thought here. This is why I told you guys, I think the low is in April. Big high, what's happening today? It's crashing. Typically, so I've observed this quite a few times where the forecast for the high is not the exact day of the high, but it is a time when prices accelerate to the downside. So it's not the day of the high, it's the day where prices begin to fall. In fact, I'll be honest with you, I ran forecasts 2 ways. 1, looking at the actual day of the low. 2, I ran forecasts looking at the first significant move from that low or from that high. And it turns out what these forecasts predict is not the actual day of the high. They forecast the day when volatility, if it's a high forecast, there's 90%, 80% probability that it's the day when prices accelerate down. And if it's a low forecast, it's the day when prices accelerate up, which typically coincides with a low, but not necessarily. Long way of saying, I believe you're seeing now what that means, Perry. On 329, you have a low forecast. You have a high forecast, and sure enough, prices are falling. So that's what I think it means. Another way to look at it is there's a margin of error there, and we can go back to if it's a 29, there's 5 days there, so March 25 could be as early as this high would materialize, and I think you're seeing it. I mean, this is a high. You can argue that these 3 days are the high. The actual closing high took place on the 24th, just a little too soon, but prices are just stalling, and you can see them. You can see that as we approach that date, you see this big fall. Prices are back below the 20-day cycle FLD, which is not a good sign, to be honest, not a good sign. As for the important low on 10 days from now, 10 days from now, it's a little too early. It's a little too early to be looking for the low. So that will be here. Too early to be looking for that low. This is probably going to be a 20-week cycle, 20-day cycle. The 20-day cycle. 20 day. Remember that these forecasts are based on the 80-day cycle, but I think it was 80% of them. 80% of them are 40% of them are 80-day are actually 80-day cycles. 80%, 20% produce nothing or produce volatility. I haven't done a proper study on that. I think they all work, but they don't necessarily produce highs or lows for the reason I just said, because it tends to forecast the day when you see the volatility, when you see the cycle turn, which sometimes doesn't even match a high or a low. It's just sideways and then down. What you're seeing now, it's sideways, 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 down. on the day of the forecast. But 80% of these, and it's not 40 plus 80 equals 120. What are you talking about? Doesn't really work that way. They take 100% of the forecasts of the forecasts. 40% of those, 60% will not do that. 40% will forecast an 80-day cycle turning point. Of that 100%, 80% will forecast a 20-day cycle, which means typically these forecasts are just producing 20-day cycle highs and lows. They're not producing more. So, all right, let's look at the next dates. So, to be honest, I'm looking for the actual. I think Bitcoin is going for a retest of 80K. But based on my view that this was the low at 80K, what we're probably going to see is the following. Let me see if I can draw it and it makes sense. We fall into the 7th. That will give us another 20-week low. Then we're going to rally again. Probably going to rally until the 16th, the middle of the month, something like that. There's a 16 date there. That's likely a low, but could also be a high. Based on the cycle configuration, it's probably going to be a high. So we rally into the 16th. Then we fall again into the 24th or the 23rd, which is my preferred date for the low. And the cycle looks like this. Now, couple of things here. This is assuming this is the low, and it's just an assumption. I'm assuming this is the low. I could be wrong. Why am I assuming this is a low? I didn't get to show you that here, but liquidity is going up. I don't think crypto keeps crashing with liquidity already having been going up for months. So I think we're in a sideways range for now, which means this forecast is assuming this here is the low. I'm going to put more arrows in there. So we assume that's the low. These forecasts, this is how I interpret them. Remember, most of them are not 80-day cycles, they're 20-day cycles, even though the forecast is based on the 80-day cycle. It actually gives you, most of the time, it gives you 20-day turning points. Significant 20-day turning points. I would argue this move is quite significant. So you're looking at just sideways chop in April. So I think this high has already worked. It gave us a low. Sorry, gave us a high. The next low, like you said, is in early April. That's going to give us probably another 20-day cycle low. Hey, maybe we retest 80K. As long as we don't fall below it, I think this is the outlook we need to have. Then a rally, probably into the middle of the month, another 20-week cycle. Keep calling it 20-week. I'm tired already. And then another low, late April. This is because there's no way we're going to fall into early April, and that's going to be an 80-day cycle low. It's just too short. So we need more time to chop around these levels. So this is the outlook if we chop around, assuming the low is already in and it was on March 11th. Now, of course, if prices fall below, forget it. The turning points will continue to work as expected, but we don't have an 80-day cycle low yet, which means at that point, I am looking for the first week for that significant low on April 7th. If we break support, I'm looking for the first week of April as the 80-day cycle low, because if we break support, then this is not an 80-day cycle. So we're still looking for that. And if we're still looking for that, what's the next day? Well, an intensity reading of 3.2, that will be my best guess as to when that takes place. So it takes place in early April. And as long as we're above the black line, bull market is still on. We cross below it, we're done. The high is in for everything. I don't think that's going to happen. Again, my base case is, let's discuss the two most likely scenarios. My base case is, again, this is just a 20-week cycle, and prices will fall into late April and touch 80K again. That's my base case. Second case, and I'm not going to entertain any other possibilities for now because you can go crazy with these and it's totally pointless. But my second guess would be, this is less likely in my opinion, let's say 80% probability. This is the outlook. There's a 20% chance the outlook is, or let's call it 19% chances, 1% chance it's something else. But 19% chance. Actually, March was a 20. Remember, these forecasts, unless confirmed, it could be a 20-day cycle, unless confirmed. And we have not confirmed. I've not been able to confirm this 80-day cycle. It's just my guess because liquidity is going up. It lines up perfectly. So it's just a guess. Reason I'm subscribed to Raoul Pal's GMI, Global Macro Investor, is because the one thing I like to have that's totally outside cycles is their liquidity stuff. I like seeing that because it informs my decisions. So why do I think this is an 80-day cycle low, potentially a 16-month low? Liquidity has nothing to do with cycles. I mean, it's overdue and everything, but it could be March, it could be April. And for us trading, it makes a difference whether or not we cross below 80K, I think. So 19% chance. What we're looking at is this is not an 80-day cycle low. The 80-day cycle low is still coming, and it comes on the first week of April. In fact, going into this correction, that was my base case. I thought first up, we we're going to see a high in April. When we started correcting, I thought, okay, low in March or April, probably April. So it used to be my base case. Now, seeing liquidity and all of that, I think the low is already in. And by the way, I don't have a horse in the race. I have no exposure to crypto. I don't care when the low is. So second case, low in April, we rally. Following that, we get another 20-day cycle. Let's say maybe looks perfect and it tests the black line, which is pretty bad, but it doesn't cross. And then maybe tests it again. And then we get a V-shaped bottom, which is not, this is why this is not my base case. V-shaped bottoms, by the way, if we test this line and it's not a V-shaped bottom, then eventually it crosses the black line and it's over. So this is not my base case. And again, wouldn't like to see this because at this point, unless Bitcoin just falls sharply and rally sharply, then eventually it will cross the black line and it's a bear market. So I don't think I wouldn't go with this scenario. We'll go with this. It's just chop. This is what I've been predicting on I make weekly videos at Wise, explaining my views, and this is what I told them. I said, look for this, chop. There's nothing to this rally. There's nothing to it. No reason to get excited. You're seeing why now. You're gonna get more of this until late April or early May at the latest. I hope that explains the outlook. I do have to go. Enjoy this as usual. I know I went way over time. I try to keep this to 90 minutes because I lose some people after the 90-minute mark. But hey, anybody can watch the replay, and this helps me organize my thoughts too. So I'll see you in chat. Yeah, I know you do, Barry. I know you do. And listen, I don't mind. I mean, anybody who stayed all this time, thank you so much for joining. I hope you like the announcements and the changes that are coming. I will announce everything when it's actually happening on chat, or I'll keep you updated and posted if you're interested. And yeah, I'll see you on the next one. And thanks for joining, guys. I love doing these. They're not only fun to do, they actually help me a lot. You would not believe how much I'm learning just from teaching. So thanks so much for that. All right, let's stop sharing, and I'll see you in chat. I'll see you in the next one. All right, take care, everybody. Oh, need to stop recording first. So.